It's about that time of day again. My name is Joseph. Wednesday evening, July 18th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, NASDAQ, gold, and euro. Starting off this evening, crude oil is bullish with a wedge pattern, and that tells me to look for buying opportunities using traps and seller failures with the two-try rule tomorrow morning. The S&P is range bound with a bull bias tonight. That tells me to look for buying opportunities down at the low of that range tomorrow, watching for that two-try rule at the low of that range in the S&P. And of course, the NASDAQ is also bearish and trying to break free of a short-term trading range. And my plan is to use my fake out, breakout, pullback pattern for selling opportunities below the low of that range tomorrow. Gold is bullish and rotating back to the pendulum swing target. Nice big pendulum waiting overhead. And my plan is to look for buying opportunities on gold at the low of a spike and channel pattern tomorrow. Euro is bearish and trying to retest this morning's low. And my plan is to use a buyer failure pattern for selling opportunities up at those highs with target back down to those lows tomorrow morning. I've got another great newsletter in store for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow. We're going to check the schedule. We're going to open up the charts and put the plan together in just a few moments. Before we jump in, though, I do need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out on my blog right here at sidewaysmarkets.com. I'll leave the link in the description of this video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over here to sidewaysmarkets.com and make sure you join our mailing list. I'll put all the links in the description of this video tonight. Head over to the blog here at Sideways Markets, and while you're here, make sure you join our mailing list. Give me your name and your email address, and I'll send you an email every time I publish something new. Also, don't forget, if you're on social, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I'm always posting charts, quotes, videos, all kinds of great stuff on my social media channels. If you're on social, follow me in the lower left-hand corner. And how about the charts from tonight's video? How easy is this? Boy, this is convenient. All the charts from tonight's video, that's right, you can have them ready on your computer for tomorrow. Grab those charts right below the video tonight on our blog. And then speaking of tomorrow, upper right-hand corner, if you're not a member here at School of Trade, I'd love to invite you to come out and join me in the trade room as a guest. Grab that free pass in your upper right-hand corner. If you want to learn more about our trading strategies, see how we apply this stuff right in our trade room, definitely grab that free pass in the upper right-hand corner. And if you have any questions, any trouble with your free pass, free trials, educational materials, newsletter questions, whatever the case may be, don't forget you can always hit me up on live support on the right-hand side of our website. All right, let's get going here this afternoon. We got a big session setting up for tomorrow. We made it through the Senate Banking Committee testimony from our boy Jerome Powell, right? It wasn't as bad as we were thinking it would be. It did get a little bit slow and slippery, though, like I mentioned, right around 10:30 to 11 o'clock each morning, Tuesday and Wednesday. But I'll tell you, though, that was very much uneventful. It was great. We're still seeing some low volume for summertime trading, third week of the month of July. This should be about as bad as it gets, right? It gets a little bit slower. When the weather is nice outside, when the weather is warm, the month of July, it tends to slow down a little bit indoors, right, in the markets we trade. But it's only temporary, so we're pushing through it right now. So we made it through Tuesday and Wednesday. What do we have here for tomorrow? It's not a lot on the calendar tomorrow, but we do have that jobless claims report at 8:30 and that Philly Fed survey at 8:30 as well. Now, as I've mentioned many times before, I'm not a big fan of the jobless claims report. It's been pretty much a yawner for a decade now, and I don't think anybody really pays much attention to that jobless claims number anymore, right? Most of what we're looking at tomorrow will be that Philly Fed Outlook survey. We've got tax cuts, we've got tariffs, we've got all kinds of things that have happened over the past few months, and we expect to see, right, that number tomorrow at 8:30 is probably going to be on everyone's radar. So I'm going to definitely be watching it as well, and hopefully that'll be a nice shot in the arm early tomorrow morning, really get these markets moving well here for us. Now, don't forget, we open up our trade room every morning at 8 o'clock Eastern time, so we're going to have a front row seat for that news tomorrow at 8:30 Eastern. So, of course, I look forward to seeing you there with me. We have nothing else to really worry about, right, as far as news goes for the rest of the day. We may see a bit of gold bugs, right, getting a bit squirrely tomorrow afternoon because we got a bunch of these note announcements, right? But other than that, though, there aren't a lot of real big news events, right, on this schedule. So early session news tomorrow, 8:30 Eastern time, and come out and join me. 8 o'clock Eastern time, we'll be in our trade room, and we're going to trade this plan together. All right, speaking of plan, let's break this plan down. Got a lot to cover here tonight. We got crude oil, S&P, NASDAQ, gold, and we'll wrap up tonight. We can't forget about, right, that mighty euro. Starting off here tonight on oil, crude oil is bullish with a spike in channel, possibly a wedge pattern this evening, and that tells me to look for buying opportunities using pullbacks and traps down below the moving average, right, for that target up around that 68.42 level tomorrow morning. Now, the most important actionable information on this chart tonight is we know we're bullish, right, and you can easily see here if I line up these highs and draw a trend line off of these lows, you can see we have a wedge, right? Strong bull move up, pulls back, and runs higher with a wedge. Now, we've talked about wedges quite a bit on this newsletter over the past few weeks, but just to remind you, when we look at a wedge, the most important thing to remember is when a wedge is really wide, we can trade inside the wedge. But eventually, though, the wedge starts getting narrower and narrower and narrower. And when the wedge starts getting really narrow, there isn't a lot of space to trade inside of it. And so really what happens is buyers don't want to buy into the top of that wedge because it's resistance, right? So we end up running out of any real opportunity here. And so as the buyers realize this is happening, they stop buying, and price will usually pull back off of that high. And it can be a relatively significant pullback, right? Look for about a halfway pullback, right, off that overall move higher, right, inside that wedge, right? So that pullback now, that's the move that I now want to be looking for to be a buyer now, right, on our way up to what is the big target for the wedge. And that's where these two trend lines come together, right? The term that they use, right, is vertex, right? When two lines converge together, right? You could call it a convergence point, right? It's most commonly known, right, as the vertex. This is where two lines, right, come together. And what usually happens is when we get to that vertex, we usually end up going up, and we usually end up going a bit sideways around that vertex and then pulling back and doing it again. Right, so we've got a couple opportunities here, right, that I'm looking forward to here right now, right, for the bulls. The key is that we know the direction and we know where we want to be trading. Now all we have to do is wait patiently to get that pullback and see if we can't get in on maybe a seller failure, right, or a trap pattern, right? Okay, so here's what we're looking for. I'm going to use these highs. I'm going to bring it down to that low, and you can see how it kind of creates a spike in channel, right? A little spike in channel. It doesn't fit as well for a spike in channel. I think the wedge fits better, but the spike in channel gives me a definite area of support here that I can use for buying opportunities. So what I'm looking for here is I'd like to at the very least come down, right, and get at least a trap low below the 67.53. Now that will set up our first buying opportunity, right, which would be a trap pattern coming off of, right, that 53. Now, if we pull back to 53, we're also going to be below the moving average. Now, what happens is when we have a bull market that moves quickly lower and makes a new lower low, okay, we oftentimes are going to have sellers confuse the market for a bear market, right? So we make a new lower low. And remember, right, in all the Trading for Dummies books, not that we're all dummies, right, but all kind of the 101, trading for a beginner books, right, they talk about we're making lower lows, right, it's a bear market. So rookies will tend to confuse this for a reversal. The momentum is clearly bullish, and we know the odds are on the side of the buyers right now, but I'm going to wait for those sellers to try to sell that pullback. And what that's doing is it's basically giving the sellers just enough rope to hang themselves. I now know where their stops are, and I can now look for those sellers to fail so I can buy into their stops. That creates the second buying opportunity. So here we have a trap pattern coming off of that low, right, into a failure pattern. Let's make it a little bit smaller here, Joe, shall we? Right, a trap pattern. There we go, trap pattern, right, into a failure pattern. Now, what happens when sellers fail? Think about it, right? What if you were a seller and you got stopped out? How would you get out of your trade? You'd become a buyer, wouldn't you, right? We buy our way out of those short positions, right? It's called a short covering rally, right? So the market rallies higher. What's going to happen? The moving average will come over. Now, as that moving average starts to correct going back higher here, right, we don't want to buy high. We want to wait and buy the pullback, right? That's the next pattern I'm looking for, right? The pullback pattern, wrong direction for that arrow, right? We'll call that a pullback pattern, right? And that will happen in the wake of a strong move, right, going back up. Now, where's my target here? The target again is up around that 68.42. And let's also be very, very specific on this. The 68.42 level should not be trusted as the definitive level, right? You've got to remember right now, guys, we're bringing two trend lines together here, right? It could easily be a little bit higher. It could easily be a little bit lower. So what you want to do is you want to think of this as a range, right? So rather than 42, why don't we say as high as 50, right, as low as 40? Right, that kind of area up there, that will be the major level of resistance, and that will be our big target, right, as we go higher. So bull wedge, right, a bull wedge pattern. I want to buy low, right? I can do that with a trap. I can do that with a failure, and I can do that as we go running higher here now, right? I can do that with a pullback. You'll notice all of these buy patterns in a bull market. What do? They happen around the moving average, and they happen buying low, right? Buying low, buying as low as possible, right? You'll notice I'm not chasing after the moves as they go higher, okay? Now, trap patterns, failure patterns, right? Pullback patterns. Now, that's if price goes lower, right? What if we go higher here? What happens if we go higher? What if we don't pull back, right? What if we keep on moving higher here? If we keep on moving higher, what's going to happen is I'm going to adjust this battle zone. I'll move that higher here, right? I'll find my prior swings here, right? And then we'll look for the same thing, right? Trap, failure, strength, pullback, and go, right? Trap, failure, strength, pullback, and go. Trap, failure, strength, pull back and go. So even if we do continue going higher here, I'm still waiting, right, for that pullback. Another scenario would be, right, what if we keep running and we just go all the way to that wedge? Fine by me. Trap, failure, strength, pullback, and retest that high. As you can see, the plan doesn't change very much. Now, here's one thing we do need to be aware of. What if we pull back, we run back to the high, but then we see profit taking at the high? In other words, right, we get a nice buy off that low, but we can't quite crack through that high again. This now becomes a range. So in other words, if we see the market fail off that high, this becomes a range. Remember, anytime you have a double top in a bull market or a double bottom in a bear market, a double top in a bull market tells you what? Range. I want to buy low now using what I call the two-try rule. Okay, the two-try rule basically says I want to go below the range and I want to let these sellers, right, try once, try twice, and once I see them fail, I'm looking for that buy going back up to retest the high, right? I'm going to show you a couple examples of those in just a second, right? One try, two try, then we know exactly where those stops are, right? And we're looking to buy this thing into the stops of those sellers. Remember, it's a bull market, and of course, any seller failure on a pullback can be used as a buying opportunity. Last but not least, what would a reversal look like? We always want to keep an eye open for a reversal, and I like to use what I call the 1, 2, 3 reversal, right? And it's just like it sounds. 1, strong move down. 2, pull back to the moving average. Got to touch the moving average. 3, strong move through. The key component to this is strength. It's got to be a strong move against the trend. That's going to give the bears the confidence they need to sell that pullback. Okay, that's number 2. They got to test the moving average. Number 3, strong move lower. That strong move lower is nothing more than all the buyers admitting they're wrong, getting out of their long positions, and basically giving the sellers full control of this market. Now, what do we do once this market drops like this? We sell, right? No, we do not. We wait to sell high. In a bear market, I want to sell high. Where do I sell high? At resistance. Where's my resistance? At the top of a hidden channel, right? Mark up those lows, sell the high of that hidden channel. Where's their target? Back at the low where the day began. So boy, we've covered a lot on this oil, right? Trap patterns, two-try rule, failure patterns, pullback patterns, hidden channels, wedges, a lot of stuff going on. And I want to make sure if you're here for the first time tonight, if you're here watching right now for the first time right now, I want to give you a shortcut. I want to make this easier for you to quickly learn this strategy. And to do that, in the upper right-hand corner, I'm going to give you a free trading course. Trust me on this. This will be the best hour you could invest in your trading career. Pause the video. Take a few seconds of your time, register for that free trading course. I'm going to send you an email to that email address, and that email, right, will have a video in it where you can learn more about all the terminology I use, all the technical analysis, right, channels, ranges, measured moves, wedges, and you'll learn all the details of my patterns. All right, so grab that free course, right, and let's keep moving here. So now we've got a good idea of what the plan looks like for oil. Let's keep moving. How about some S&P now? The S&P is bullish and trading at the high of yesterday's trading range, telling me that I can look for selling opportunities only after I see the short-term momentum shift back in favor of the bears. Now, if we rotate back to these lows, however, then I can be a lot more aggressive using what I call the two-try rule to buy into seller failures below the low of the range tomorrow morning. Now, first things first here, I want to make sure we see the big picture here because this little chart does not really do it justice, right? Let's go out and let's take a glimpse here, right, at the big picture. What do you see? We see a strong move higher, right, into a trading range. This is from last night's newsletter. Now, last night's newsletter, right, we talked a lot about trading ranges, right, and how to use those ranges. What did we talk about last night on the newsletter? We talked about how we wanted to buy down below the low of that range, right, and we saw the one try, two try, failure back in. Remember we talked about that just a moment ago on oil, right? The one try, two try, failure, right? We went down. The bears tried to break lower. They tried to sell the pullback to the moving average. They fail, and look what happens. Buyers are there to clobber them, right, with buy orders, and the price runs higher. Well, now, right, again, knowing that we have this bull bias, right, knowing now that we have this bull bias now, we take the amount of the move below the range, project it up above the high of the range. We call this the pendulum swing. Remember that, right, from last night's Order Well, right? The amount of the move outside the range is usually the amount of the move on the opposite side, right, of that range as well, right? So pendulum swings down, pendulum swings back up, and here's we are right now, right? We're sitting right about that pendulum swing. You can also see one try, two try, and we aren't getting anywhere near the amount of follow through we need to be able to confidently think we're going to buy this breakout, right? So right now, I'm expecting now for this market to come back down to the low of that trading range, right? We're not seeing enough proof right now that we can feel confident being a buyer through these highs, right? We got the pendulum swing acting as resistance. That's obviously holding well as resistance. And again, we want to use that two try rule. One try, two try, failure, right, back into that range. Now, the point I really want to make right now is what is the direction of momentum right now, right? You tell me. What would you say, by looking at this chart right now, right, buying or selling, what would you say would be the most reliable trade right now? Buying. Obviously, we're towards the low, right? Oh, sorry. Obviously, we're bullish going in, right? I want to be a buyer. There's no real evidence that the sellers have been able to really do anything here. In fact, the only real sign of sellers is just the buyers taking profit up at the high of that range. So, good job on that. We know we have the momentum of the market is bullish, right? So we have to be very careful being a seller. Right? That's where I'm getting with this. Now, remember, we were able, and we talked about this last night, we can take a seller failure pattern off the low of a bullish range, but a buyer failure pattern off the high of a bullish range is nowhere near as reliable. Again, because I want to be a buyer instead, right? And what happens a lot of times is we see that one try, two try, we get this little trap and price jumps from there. So I can't sell, right, as if it was a bear market here. Okay, it's not a bear market. So basically there are, right, I can sell off the high, but I have to wait for the momentum to shift going back down towards those lows. And the good news is we already have the two try rule out of the way. We've gone up one try. All that momentum going higher, right? What happens? The buyers come in and buy the pullback. No surprise there. The question is, can they explode through, right? Can we break out through that range? Apparently not. We try once, we try twice, and we're now struggling, right, to hold that move higher. So now we already have the two try rule in play, okay? Just like we had the one try, two try failure, I'm looking for that one try, two try, failure back down. The difference though is I don't want to sell down here. I don't want to sell down near the low of that range, right? It's support down here. Okay, that's where I want to buy, for crying out loud, right? I don't want to sell down here. So what can I do? Well, one of my favorite things to do is to use a hidden channel. Right? Draw a trend line across those lows, bring it up at that high, and go looking for, oh, sorry about that, wrong button there, right? If we get that move down now, get that move lower here, then I can draw my trend line off the low, trend line off the high, and I can look now for that sell up at that high. And what it will usually do is it'll usually be something like this, right? Let's just say, for example, right, we run lower here, we come back up, right? I'll draw that trend line down, draw the trend line up, right, the moving average will come over here, and what will probably happen is it'll go above the moving average. We'll see a failure pattern, right, and I can take that failure now, right, because once the momentum starts to shift back in favor of those sellers, now I can use a level of resistance to sell high with what? A target back down to that low at 28.10.5. All right, guys? So again, one try, two try, right? If all we do is sit here and go higher here, I'm going to plan for that in a second. Stay tuned for more. But if we can slam lower now, find that new channel, bring that sucker down, and we'll look for that 1-2 failure, right? And sell up at resistance as we go back lower. Right now, what I'd like to do is get down to the low of this range, right? Now, assume we get down to the low of this range, right? Whether we collapse back down or we see that sell back down. Let's say, for example, now we run back down to the low of that range. I'm looking for the identical pattern right here. I want to see us go one try, right? Two try. Remember, got to pull back to the moving average. Right? Sellers will come in. They'll try to sell that moving average. That's where I know what their stops are. Right? Once those bears come in and sell that moving average, now I know where their stops are, and I can look for that buy. Right? Look for that buy coming in off of that low. You'll notice I'm drawing a trend line across those highs, lining up at that low, and that's where I'm looking for that seller failure into strength, into pullback, right, and back up we go from there, right? Seller failure into strength, strength into pullback, right, and pullback pattern going back up to retest that high. And again, if you want to learn more about strength patterns, pullback patterns, failure patterns, any of the terminology I'm using tonight, pause the video and grab that free trading course. There's an information icon in the upper right hand corner. That way you can get a deeper dive into the entire trading strategy. Now, the next big question is, how do we go higher here? What are we looking for, right, to go higher? It's relatively easy, actually. We've got this trend line that's looking great here. What I want to see is, I want to see a strong break higher, and I want to buy a pullback. And I'm going to try to get that moving average up above that trend line. I think that trend line can be used as an excellent, what I call a reversal line, right? And this would be a prior resistance line that can be used as support. Now, to make it even more interesting here, right, we can also mark up those highs, right? So imagine now we run higher. Let's mark up those highs up here, right? Bring it off of that low, and that also creates, right, a level of support there as well, right? So we're trying to use that low of that new channel along with, right, the trend line as well. That's where we're looking, right, for that buy. Where would my target be up here? My target at this point now would be this 1, 2, 3 measured move, right? So this is going to be A, right? That'll be B, that'll be C, and then D, of course, is up there, right, as our big target waiting here overhead. But again, that's going to require quite a bit of strength, right, as we go higher. So 1 would be a strong move down, right, hidden channel, sell off the high. 2 is going to be a 1 try, 2 try failure, strength pullback back up. 3 is going to be a strength pullback, right, and go off of the moving average. Remember, get that moving average up above that high. That's important, right? We want to use that moving average up above that trend line, and that's going to give us the edge we need, right, to be a buyer here above that high here. Last but not least, what does a reversal look like? We've got to go through the low, 1, 2, go, right? We've got to get that strong second leg, right? For example, back here, right? Strong move down. If these bears would have held this and kept going, this would successfully be a breakout. So we go lower, 1 try, 2 try, remember, if that second try fails, we're going back into that range, right? If the second try is successful, now we find that new channel, find that hidden channel, right? And we're selling off the high of that hidden channel for a retest, right? Of not today, but yesterday's low, right? We had that big spike going higher, right, in yesterday's session. So nice and easy plan there on the S&P. The NASDAQ, however, is a little bit more of a curveball right now, and it all boils down to this trading range. The NASDAQ is bearish and trying to retest the lows from earlier in today's session, but a recent trading range alerts me to avoid trying to sell this break lower, rather waiting patiently for a successful break down and then looking to sell the retracement up at a key resistance level overhead tomorrow morning. You know, the most important clue about this market right now happened in the first few hours of the trading day today on the NASDAQ. The bears took control of this market. If you remember, the market was bullish, right, leading into this morning's session, right? Remember that big bull run that we saw late yesterday? Well, it didn't take them very long at all. Strength, pullback, and strength, right? By the time we came in this morning after 9:30's opening bell, we were obviously bearish, right? So yes, there is a long-term bull trend, but no, the short-term trend is not bullish. I'm a day trader. I'm not a swing trader, so I'm not looking for, weekly moves here. So for me, all I care about is what's happening right now. And it's important for you to really understand, if you're a short-term day trader, that means you're always flat overnight, right? That's basically the term day trader comes from. If you're trading in the day time frame only, right, then we're really wasting our energy trying to incorporate slower time frames, trying to incorporate the longer term trend, because how many times have I seen a bullish long-term trend, but yet today all we get is bears, 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 bears? I'm not going to sit on hands and miss out on the opportunities. I'm going to trade the short-term trend. I'm going to trade the short-term momentum right now, right? So right now, the short-term momentum right out the gate this morning was bearish. Now, whenever the bears take control of the market, the bulls, the opposite side of the market, they have only one way to gain control. And no, the sellers cannot give them control. They can make it easy for them to get control, right? But the bulls have to take it, right? Think of, basketball, for example, right? The sport of basketball, right? If my team has possession of the ball, and I drop the ball, the other team has to pick up the ball to take possession, right? Makes sense? That may not be the best analogy in the world, but the bottom line is the buyers now are forced to prove to us that they're taking possession. Now, how do they take possession? With that 1, 2, 3 reversal, right? We saw a 1, 2, 3 reversal for the bears. Well, surely with this strong bull trend, right, the buyers should have no problem with a 1, 2. No, they don't. And you can see right away what a stark contrast between the bears 1, 2, 3, right, and the bulls 1, 2, 3. So right off the bat, you can easily see the bears have the edge. Now, again, if you want to argue about long-term trend, that's a different conversation. But right now, as a short-term trader, the bears have my attention. Now, the next big clue has to do with the fact, right, that we are seeing double tops, double bottoms, flat moving average. Now, I have to warn you guys, out of the last 10 years of all the stuff I've learned in my trading career, and I pass that knowledge on to my clients every day in our trade room, okay, one of the hardest things for a new trader has always been, and this is across thousands of clients I've worked with, one of the hardest things to do is keep your eyes open for short-term ranges. I'll tell you, these little short-term ranges, just like we're seeing right now, they'll sneak right up on you. Right? And see what happens when you see a short-term range. When you see a short-term range, what do we do in a short-term range? We buy low and we sell high, right? Isn't that just kind of the rule? That doesn't matter what you're trading, what time frame. It doesn't matter, right? When we have a trading range, what's always the best plan of attack? Buy low, sell high. So where are we right now? We're at the low of that range. Who has control of the market? What is the market's momentum? Who has possession of the trend? The bears do. So I want to sell, right? But look where we are at the low of that range. Not a great place to be selling, right? We want to be buying the low of this range. Okay, now where do we sell? We sell up at the high. Okay, now what if we go lower? What do I do then? Then if we can go lower and get that momentum showing me lower, then I can sell on the way down. So the two most important things right now, one, bears have control. Remember, when the bears took control, the buyers now have to rip it out of their hands, right? They're going to take it. Okay, the bears can't go, here you go, take it. Right? They can literally stop selling, and the buyers can have a huge opportunity to take control, but the buyers have to take control. Make sense? Okay? Trust me, that may not make sense all the way right now, but after you hear me say this, you'll start getting those little light bulb moments will start going off, right, throughout the rest of the week as you watch the opposite side of the market struggle to take control. The second big piece of this is this trading range. And I'm telling you right now, one of the most important rules that we use in our trade room before we get into any trades is we always ask ourselves, are there any short-term ranges, right? Because I'm telling you right now, I don't care how much experience you have, it's always easy when you're in the heat of the battle to forget about those flattening moving averages, double tops and double bottoms. They're small and they sneak right up on you. And what that will do is, right, is a lot of times, right, I'll think, ooh, I want to sell this, right? I want to sell this pullback right now, but look where you are, at the low of that range. See, this is probably going to be a loss, right, to sell that pullback right now. Why? Because you're selling the low of that range. Okay, so how do I sell it? I want to sell the high. Okay, here's option number one. I know, long-winded here, but again, there's a lot I want you to learn on this example, right? This is a priceless example here right now. The bears, they want to get down to that measured move, right? The bears want to get down to that A, B, C, D, right? That's their goal, down to that 73.61. The buyers, they want to take this and go back up to retest that high. How does that work? Well, let's talk about bears first. I want to sell the high of this range. We want to go up, and as we go higher here, what's going to happen? Sellers will enter the market. Why? Because that's what sellers do when the market goes higher. Buyers take profit, sellers enter the market, right? Buyers become sellers when they take profit, and sellers want to sell high, they come into the market. Now, if we can get a strong move higher here, though, what are we likely going to see? Buyers will try to buy this pullback, and they'll try to run this market up to that 74.38 area, right back around that high. What I'm looking for is, we call that two-try rule. One try, two try, right? Buyers try once, they break higher, they pull back. Buyers try twice, they pull back to that moving average. Now we know where their stops are. Now, stops are like gasoline on a brush fire, right? It roars, right? So when we sell, and we sell high, and we sell into the stops of the buyers, and again, when you get stopped out of a long position, what do? You become a seller. It's the only way to get out of a long position. Okay, very, very important. At this point now, the buyers have just enough rope, right, to hang themselves with, and we sell into those stops. Now, the other option is we go lower. Okay, now we talked about this last night on the newsletter, right? We look for that fake out, breakout, pullback pattern, right? The FOBO PB. Remember that from last night's newsletter, right? What do we look for? Strong move down. Remember, I don't want to sell low here. So I have to wait for some strength going lower to give me the confidence now, and more importantly, give everybody else the confidence as well. I'm going to get that moving average down below the low of that range and looking for what I call a two-legged pullback and a sell. Right? Now, there's a lot of ways in which I can encourage more sellers. For example, I can use this as a channel. Right? See what I'm doing here, right? Mark up those two lows, find a hidden channel, sell the high of that channel. right? I can also too, right? I can also too, let's say for example, we kind of mosey our way down here. I can also use the low of that range in combination with that trend line, and that can also be used here now, right, for resistance. So the moral of the story is I always want to sell at resistance, okay? Whether it be selling at the trend line resistance, hidden channel resistance, right? Or simply, right, that low of that trading range. The key is I've got to get a strong enough breakout lower to get that moving average to follow low enough to give the buyers, right, a reason to get away from this and let the sellers take this price lower. Now, what if we keep going lower here, right? What if we keep running lower here? What if we never pull back? Well, if it keeps going lower like this, it'll probably be a new spiking channel. And we see a spiking channel, then as we mentioned last night, we find those prior swings and we look for traps, right, up above that high, right? Again, you want to learn more about trap patterns, grab that free trading course, upper right-hand corner, right, and learn more about trap patterns. Now, last but not least, how do we turn bullish? Okay, so now we know to be a seller, it's one try, two try, failure, back down, right? It's strength, pullback, continuation, right? Or it's falls apart, wait patiently, trap high, right? Those are the three scenarios for the sellers right now. Now, if I want to be a buyer, how do I buy right now? Do I buy a trap low? Look, it's a bull market, right? Into a trading range. Can I buy the low of that range? You can try, but you've got this falling resistance in your way. You've got a real small trading range there with a range high that clearly hasn't had any problems holding things back so far. So there's not a lot of reasons to be confident that a buy would be worth our time right now. Right? If I want to be a buyer, I still need these bulls to take control of this market. And how do they do that? We've got to get a strong move up. Right? Got to be a strong move up. Now, this could be just one big strong leg higher, right? Or it could be a 1-2 going higher. Hopefully, that's what we get, right? If we get that 1-2, then I can draw my new trend line and I can look for a buy off the low of that trend line before we get up to retest that high at 37, right, 88, 37 and 3/4, right, 38 even, whatever you want to call that, right, up at that high. Now, if we jump, right, I mean, if we jump higher here, right, almost a straight line higher here, what you're going to want to do is wait for, right, wait for that deep pullback and grab a seller failure going back up to retest the high. Okay, those can be tricky sometimes. So if it goes straight up, okay, wait again. Remember, we never buy high. We don't buy as the market's moving higher. We buy as the market's pulling back. I realize it's counterintuitive. It goes against our instincts, but that's what it takes to be a professional trader. You have to reprogram yourself to not trade like a human, right? We've got to trade like a trader, right? And traders buy low. They don't buy high. So there's our plan. Both bulls and bears, if we sit inside this range, we sit on hands until we see more. Let's keep going. How about some gold here? We have some gold and some euro, and I can already see I'm running pretty late here tonight, so thank you so much for sticking around. Gold is bullish and rotating back into the range from yesterday's session, telling me to look for buying opportunities using the low of a spiking channel with a target using that pendulum swing, right, tomorrow morning. Now, the most important information right now is we came out of a range from last night's newsletter. Okay, now that trading range, the amount of the move lower is the amount of the move higher. We call this the pendulum swing, right? I have a pendulum or a balance right in the middle of that range. We swing lower, we swing higher, pendulum swing. Very, very simple technique. A lot of what I do is very simple, right? And it needs to be simple because when it's simple, other people are doing it as well. And when other people are doing it as well, this is the beauty of trading, right? It's the only business in the world where it doesn't pay very well to be the only person doing something, right? Think about that for a second. The business of trading is one of the only businesses where you hope everyone else is doing something similar. right? Could you imagine that in any other industry, right, where you want competition, right? Yeah, see, that's the interesting part about trading. It's got to be simple, because if it isn't simple, you're not going to be able to leverage the self-fulfilling prophecy. All right, I'm running late on time here, so let's keep going. So that's the ultimate target here. Now, what is really interesting here is that if you take the opening price today, you go down to that low, and you take that, right, and again, you take that same measurement, and you move it higher, well, I'll be darned. Look what it is. It's right the same spot. So you take the price we opened at this morning, or last night, 6 p.m. Eastern last night, right? The amount of the move down is the same now as that pendulum swing. All right. So I'm all hot and bothered right now about this 34.5 area. There's a lot of confluence there, right up at that 34.5 area. Now, the next thing we have to think about is momentum. Remember, we always want to trade in the direction of the short-term momentum. Yes, the long-term trend is bearish, absolutely. And if I was a long-term trader, I'd be saying this is probably just a pullback. However, I'm a day trader, and if you're watching right now, I assume you too are a day trader as well. So what is the short-term momentum? We had a bearish momentum going lower, but then look, strength, pullback, bam, big strength going higher. 1, 2, 3, reversal. What do we do after we see reversal? We connect these two highs. We draw that channel off of that low, and we look to buy off of that low. At the same time, I'm also drawing a trend line off of that higher low. That creates a rising support, and this creates, right, my buy zone or my battle zone. Okay, that's where I want to be buying in this market. Now, assume for a moment with me here, we pull back to that low. When we pull back to that low, will we be above or below the moving average? We'll be below the moving average, won't be? So we pull back to that low, I'm looking for a trap pattern below a prior swing, right? Trap into a failure off the moving average. We talked about this earlier, right, on most of these markets already, right? And that failure into strength into pullbacks, right? And pullbacks, right, to new highs. So that's the short-term plan here, right, on the gold. And it could go even lower, right? It doesn't have to happen in the battle zone. It could go lower. Big, strong move down. The stronger the move down, the more sellers are going to try to sell this thing. If they fail, wonderful. It's a bear market until what? It's a bull market until the bears can take control, right? How do they take control? Strength, pullback, strength, right? So if they can't complete this two-legged move going lower, we're looking to buy into their failure, buy the pullback, right, and ride this momentum back up to retest that high. All right? Now, what if we go higher here, right? What if we reverse and we immediately go higher? Same thing. Get it below, right? Failure, strength, go, right? Same thing. Wait for that pullback here, right? Wait for that pullback. Now, how do we reverse, right? Reverse is pretty easy, right? Strength, pullback, strength. Find that new channel. You guessed it, right? Same technique I'm doing right now. It's the same technique I'm using for the long side. We'll use it for the short side. The key is going to be, though, the objective, the goal for the sellers is to get back down to that 20.9. So if we go strength, pullback, strength, and we end up all the way down, we don't want to sell down here. We want to go up, right, and sell, right, and sell high, right? Sell high as we go back down to retest. All right, so just be careful of where you sell, right, if we do get the reversal. Now, sometimes these things can really get aggressive, so watch out for this thing to really jump higher here. If we have to, we'll adjust that channel, right? You know what I'm saying, right? So, what if we just jump? What if we jump? If we jump, I'll adjust the channel, right? And we'll use a steeper channel, right, by the low of that channel. All right, guys? The range at this point is useful for determining the target, right? I'm not too worried about the range at this point. What I am worried about, though, is buying low. Even if we go higher, buying low. All right, guys? And remember, it's not a bear market until the bears take control. Let's keep going here now. How about some euro? Euro is bearish and trying to retest today's low, but this strong bull run higher is giving the buyers an easy opportunity to take control and reverse this trend. So my plan is to wait for the buyers to enter the next pullback and then look for selling opportunities into their stops with a target going back down to retest those lows. Now, you'll notice here we have the overall momentum going lower here on the euro. What do the buyers need to give us control here now to the upside? A strength, a pullback, but they've got to pull back what? To the moving average. Notice how they didn't pull back to the moving average yet. Well, now they have, right? So strength, pullback, strength, right? We got to see one more leg higher if we're going to call this a bull market. Then, of course, we'll mark out that new channel, right? And we'll buy the low of that channel on our way up to the target, right? Up at that measured move, right? We're buying a low of that channel, right? Or let's just say, for example here, right? We go up, right? We try to go higher here now. Now we know where stops are. Now we can look for that sell into their stops, get that moving average coming over, right, and sell that pullback, right, as we go back down to retest that low, right? That's your final target, just above that 16,500, right? So buyer failure into seller strength, of course, right, into a seller pullback pattern. Now, we may also see strong leg up, right, double top here. If we see a double top at this point, right, the momentum is still bearish. At that point now, it's the fake out, breakout, pullback pattern to sell off of those lows, right? Or it's the one try, two try, failure, right, back down into that trading range, right? Same plan that we talked about, right, on the S&P earlier on in this video lesson. All right, guys, don't forget, if we do get that strength, pullback strength going higher, find that new channel, right, and buy that pullback. All right, guys, at the same time here, don't forget, right, if we do go sideways instead of a range here, again, it is still an overall bear bias. Be careful trying to sell too close to that low. Wait for that strong move down and then sell it, right, off the underbelly of that trading range, right? We're not trying to predict breakouts here. We wait for the breakout, and much better off selling, right, at resistance than trying to sell that breakdown below support. All right, guys? Pretty easy there on the euro. It all depends on what happens here in the next few hours. And of course, tomorrow morning, don't forget, we'll be in our trade room, 8 o'clock Eastern time with a front row seat. We got that Philly Fed survey tomorrow morning at 8:30. We're coming out of that Tuesday, Wednesday testimony on Capitol Hill. Tomorrow is going to be one of the first days of the week where everyone's firing on all cylinders, and we're going to have a great day together. Don't forget, 8 o'clock Eastern time. I'll see you guys there tomorrow. If not, grab your free trial on the homepage here at School of Trade. Learn more about our beginner, intermediate, and advanced classes. And don't forget to keep in touch. You can always call me in the office. I got a toll-free number, right, that's always available. And of course, you can always hit me up on live support as well. Guys and gals, it is such a pleasure to be able to share this knowledge with you. I've been teaching and trading this strategy every day in our trade room since 2008. From what I can tell, one of the longest trade rooms still active online. It's always great to be here. Hope to see you guys tomorrow morning there with me. If I don't, we'll come back and do the next newsletter tomorrow night, same time, same place. As always, my name is Joseph. Thank you so much for being here. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye.